Hi, welcome everybody who watches the channel. Let's go ahead and talk about a few things, mostly Bitcoin. We will look at the S&P 500, expected move and stuff like that. But first, let's get into this intraday, yesterday, near-term Bitcoin price action. One thing I want you to focus on real quick for today is Saturday, is just yesterday's range is so massive in terms of the breakout that it had. This is the entire range for yesterday over here to the left-hand side of the chart. And you can see that in these candles, there is mostly blue. Now with this indicator, it is basically your intraday range volume profile. And yellow sellers, you can see that most people were buying yesterday as Bitcoin was breaking out. But the area that I want you to focus on is down here. It's hard to see. Let me stretch it out here a little bit. All right, so you can see down near the bottom edge of yesterday's range, when the day was made, 2000 hours, that's when the day starts. So that's the open of this daily ranges candle. Notice how much selling was taking place down here around the low of the day. And then this candle came in, and this is probably what really set the sellers up for the London and New York sessions. However, on this 4-hour candle, I was simply watching this white line here, which was daily demand. The fact that daily support was so close to daily demand, I was just simply watching for this candle to turn red. And when it turned red, I simply bought it. And it literally wasn't very long after this that Bitcoin just took off to the moon. Now, we were looking for bullish positioning since all the way back here when Bitcoin looked like this on a 4-hour chart. You can look at this tweet here, and I basically said this is a small cup and handle formation. This is a bullish formation on the 4-hour time frame, but it is still in a small downtrend, and most of the time these bullish patterns will fail more often than not in downtrends. But if you go look at this, that pattern, which is right here, I will draw it out for you. All right, so this was that formation here, and we were watching this for, a breakout. We were looking for price to liquidate this swing low and then go back into the range. And you can see this is the area here. So any of this price action, I want you to notice these point of controls here, right here in this area. Notice how there's the point of control for that day. 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 There. Can you see how basically the point of control, which it just shows you where the most volume is traded at in that daily range at the price over here? Notice how none of the point of controls were low, like down in here, right? Most of them, it looked like it was literally building a support roughly around $56,500, right? It came right back down here and tested the low of around 56,538 and then held and then started to slowly drift higher. When you're doing technical analysis, please make sure that you're looking at this, the most of the generalized things that I tell you to keep an eye on. Where are you on the daily time frame as far as the RSI goes? And where are you on the daily time frame as far as the 21 exponential? So if we pull up the 21 exponential, you can see the 21 exponential was actually broke right here on Sunday, July the 14th. Right at around what we opened the day at the 259, 185, spot 34, and continued higher. The reason we were looking for bullish entries is anytime you get around, you got the red here as the 200 simple and the purple is the 200 EMA. Anytime you get near oversold on a daily time frame and around the 200 exponential or simple, whichever moving average you want to keep your eye on, those are generally areas to buy. Now I'm going to play something that I said several weeks ago when Bitcoin had only broken down with about 2 weeks of bearish price action. Just bear with me. Ascending trend line here did ultimately hold it, but you are in a wedging formation. And remember, as far as I'm concerned, we could trade all the way down and take this low out as long as price shoots back up into the range. The range that I am talking about is this range here. As long as price gets back up into this range. So if we trade down here and we take this low out, I want to see price get back up inside of this range and then make a higher low and then continue back to the upside. Okay, so basically what I was saying is if we get that, we can then start to look for bullish entries. Here is that low. Why is that? Because people are not looking at all of this price action here as a range. Since you didn't make a higher high, since you made the all-time high on this day here, you didn't make a higher high. People are looking at this as a trend. Most people on YouTube and Twitter expect price to either do this or this. They don't expect price to stay in a long-term range like this. All right, they don't expect that. Whereas this is where price most of the time spends, doing this stuff right here. All right, it most of the time will stay inside of a range. But yet people are constantly looking for those, consecutive up only or down only trends. So we did break down below that low. We spent several days accumulating down there, and then we got back up into the range. Here's that low. Notice how this day right here come in and set that low. And if you remember what I just said, we could see price come down, liquidate this low right here. Then I want to see it break back up into the range and do what? Come back down, set a higher low, and then make a higher high. That would be bullish in my opinion. All right, so now with all that being said, this chart is a liquidation chart. It's basically a heat map. It shows you where most of the resting orders, stop losses are inside the marketplace. And basically the way this works, this is an older chart. This chart was screen capped about 4 days ago, but you can notice right here's that 4-hour cup and handle formation, right? We got the cup down here, and then over in here, we started to set that little handle part. And then we were looking for bullish opportunities. Because if you notice down in here in the purple area, well, you can't see it because my stupid thing is in the way. But let's just say from here, it goes into the deep purple. That's essentially no liquidity, all right? And then you get up to the top where there's a lot of liquidity and it goes from, slight green to basically yellow. So here's liquidity, liquidity, liquidity. If you look at the swing lows, there's not much liquidity here. There is liquidity there. Don't get me wrong. People have been buying lows, accumulating lows. A lot of lows were accumulated. But if you look back in the past here, where was the majority of the liquidity? The majority of the liquidity was down. On top of that, we had a lot of FOMO reporting going on with the Germans selling all of their Bitcoins, several $billion worth, and then you got Mt. Gox, all of that garbage, when literally people were going to buy into that, right? That's essentially, remember, we had a halving. And generally what happens with Bitcoin, if you look at the BLX or whatever, that chart will show you, every 4 years, every halving cycle, there is an exponential bull market that happens. I mean, people forget about this stuff. Or you'll hear people say, oh, well, this time is different. No, it is not. The markets work the same way. Whenever liquidity is injected into the markets from M2 money supply, that is generally bullish for risk assets. And we've had the M2 money supply going up for a while now, right? It's not going down, it's going up. So we generally look for that to be bullish. And you can clearly see with this heat map that the majority of the liquidity is higher from this point. Now, I'm not saying that price won't come back down and get any of this small liquidity. I'm not saying that at all. It can absolutely happen. All I'm saying is the path of least resistance at this point, in my opinion, would be higher. we've gotten a huge move out of that. So if we go over here and we fib this range from this swing high to this swing low, you can see where we stopped right at the 618 retracement. So people that are expecting, like I said earlier in the video, a standard only down move, they're going to see this retracement into the 618 right in here, even as high as where we got yesterday up into the 786 as a selling opportunity. So we could see several days of pullback here. And then again with yesterday's move, depending on how many stops were triggered, could trigger another outsized bullish daily candle. I mean, you could be sitting at all-time highs in 3 to 4 days. I'm not suggesting that's what's going to happen. I'm just saying with the amount of liquidity that's sitting above us, I mean, think about it, guys. Right here's your all-time high. If you have 3 or 4 more days that look like this day's right here, you're going to be up there. You're going to be up there. So, I mean, I would expect a little bit of sideways trading to come in through here, potentially. But if the sellers are on their back feet right now, the short sellers, if they are on their back feet, then you could just see more bullish price action. So essentially what we're going to be watching moving forward on Bitcoin are the daily lows. We're going to be keeping eyes on the near-term daily lows. Going into the 5-minute time frame, if I show you this, I don't take trades based off the 5-minute time frame generally, but here is the level at which I got long, right there. So, I mean, if you gotta watch the 5-minute time frame, I got asked the question this early this morning, when would you be looking for a confirmation that the move is working out? There is no such thing as confirmation. There is not a single signal in the world that would give you 100% effectiveness on your position taking that will confirm a bullish move. Nothing. But you can clearly see how price acted as resistance there, acted as resistance here. Yes, you closed one 5-minute candle above a daily level, which is not anything to write home about, because then you essentially moved lower. But right in here, you can see that support is holding. And then here is the next test of that. Boom, up. So this is a bullish reaction. Let me see this high right here, this high. Once you've taken that out, you can try to get long there and throw a stop loss under that low or that low, right? If you're watching a daily level. If you want to do that, you can. Just remember, you're not always going to be right. So you're only risking the same amount on every position. But anyways, this is what it looked like that day. Like, you tested it one time and took off. Generally, it takes many tests before it takes off, but the actual time that took place was around 9:30 in the morning. What happens at 9:30 in the morning? The United States stock market opens, and that's generally when we look for the last period of volume or large volume to come in. The S&P 500 had a pullback this week. We had several days of bearishness. We broke down on Thursday below the weekly expected move, which was right there at 55.52, and then Friday we traded up into there for a little bit and then closed lower. So next week our expected move high is going to be 55.88 spot 99, and the expected move low is going to be 54.20 spot 99. We have an $84 expected range for next week. Here, I'll show you right here. This is Saturday, right there. That's the number I'm looking at. $84. You could round it up to 85, seeing how it's 84.6. I just did 84. So if you calculate an $84 expected range, this is going to be that range, right? We would expect price to trade up to around here. If this is going to have more of a pullback, more of a drawdown, if you will. So let's go ahead and take a look and see. Are we expecting more of a drawdown? Well, we're right at the 50 on the RSI on the daily. And we did close one day under the 21. So if this is going to be a bear trap, then on Monday we would expect a bullish candle, right? But you have to be very careful because that could also be a trap with the range coming in here. Now, as far as news goes next week, the only thing we really have is GDP on, what is it, Thursday? Yeah, we have GDP coming in on Thursday, July the 25th. And on Friday, July the 26th, we have core PCE, which is also a big thing for the Fed, right? Another inflation aspect. But if we go look at the weekly time frame on the S&P 500, you could pull back all the way down to 5284, as that's your last weekly support, and the 21 exponential. So I'm not saying that we're going to pull back next week all the way down to 5277. I'm simply saying this is where the next support is on the weekly time frame, and currently where the 21 exponential on the weekly time frame sits. So I would still remain bullish all the way down to here. Now, if we come down here in 1 week, next week, that might change my mind a little bit, depending on where that candle closes. But if it's another small bearish week like this, I won't be concerned at all for any, severe downside right now. This is going to be called a bearish engulfing weekly candle, and it is. You did take out the previous week's high, you did take out the previous week's low, and you did close well beyond the low. So a lot of people are going to be looking for short side entries right around that weekly supply, which is also going to put you around the 55.90 or 55.88, which is also the high week expected move. So could you potentially look for shorts there? Yeah, you could, but just keep in mind you're still bullish overall. Make sure you guys subscribe if you haven't yet. Hit the bell notification, smash a thumbs up. Thank you guys so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.